Hi believers, this is Tushar from Waya. Welcome to our monthly market wrap up for March. As we enter April 2025, the Indian stock market shows promising signs of recovery. March witnessed a significant rebound, setting a hopeful tone for the new fiscal year. In March, the Nifty 50 index rose by 6.3%, making the best performance in 15 months and ending a 5-month losing streak. This rally contributed to a 5.34% gain for the fiscal year ending in March 2025. The BSE Sensex also saw a 5.1% increase during the same period. Factors such as value buying, renewed foreign investments, and improving economic indicators fueled this uptrend. Despite foreign investors injecting 2.65 billion during the last 5 sessions of March, the fiscal year recorded a net outflow of 15.57 billion. To attract more foreign capital, the Reserve Bank of India plans to double the investment limit for individual foreign investors in listed companies from 5% to 10%. The Nifty 50 has rebounded strongly from its recent low of 21,964 and is now approached the key resistance level of 23,800. Given that momentum indicators are overheated and in the overbought zone, the index may consolidate or undergo a corrective phase within the range of 23,300 to 23,800. This pause would be essential for a healthy continuation of the uptrend. If the price manages to break out of 23,800 resistance zone, the rally can continue till 24,200. Bank Nifty has formed a double bottom pattern on the daily time frame and has shown a stronger rebound compared to other indices. The banking sector remains strong, driven by anticipated interest rate cuts from the RBI and an expected credit growth of 12 to 13% for FY 2026. Mid-sized private banks with loan book growth rates of 15 to 20% offer compelling investment opportunities. If the index closes above 52,200, the next target is around 53,800 levels. Looking at the small cap index, the index witnessed the sharpest correction in this phase, declining by 27% and reaching a low near the election day levels recorded in June. It formed an inverse head and shoulder pattern near the lows, leading to a strong rebound. Currently, the index is holding about the pattern's neckline. If it sustains this level, it has the potential to reach 17,200 levels in the near future. The mid-cap index, like the small-cap index, has managed to close above the election day lows, but remains in a zone where bearish pressure persists. If it can break and close above resistance level of 53,700, the rebound is likely to gain momentum. Regarding the broader market, all indicators are currently in the overbought zone and appear overheated. It's advisable to wait for prices to cool off or consolidate within the range. There is a high probability that the market will consolidate before resuming its uptrend towards the next resistance levels. Looking to the sectorial indices in specific, with record government spending, private investment, and rising demand for construction material, the infrastructure sector looks very promising in April 2025. Stocks in construction, cement, steel, and logistics could outperform as India continues its massive development push. Technically, infrastructure sector has broken out of its falling trend line, displaying strength and the potential to rally up to 8,900 levels. A buy on dips strategy is recommended, with stocks like L&T and GMR Infra appearing promising within this sector. Coming to the next sector is pharma. Technically, the pharma sector has broken out of a downward sloping channel. A close above 22,400 could drive the index to a new all-time high. With rising domestic and global demand, strong exports, government incentives, and increasing healthcare awareness, the pharma sector looks very good for 2025. Investors should focus on companies with strong R&D pipelines, growing exports, and leadership in specialty drugs. Stocks to watch in pharma are Marksans Pharma and Piramal Pharma. The final sector, which can deliver good returns in 2025, is power. Due to rising electricity demand, government push for renewables, expansion of power grids, growth in EV charging infrastructure, and increasing private investments. The Index has maintained a strong uptrend over the past few years. During the recent correction, it retraced up to 50% of its upward move. If the index closes above the weekly high of 6,750, a new rally in this sector could resume. Stocks to watch in this sector are Schneider Electric and Transformers and Rectifiers Limited. Coming to the conclusion of this sectorial update, this trend will be driven by valuations becoming appealing, especially in the small cap and mid cap segments. The 30 to 40% crash in some stocks have eased valuation concerns, sparking bottom fishing by investors. These factors will also make FPIs come back in a meaningful way. They have turned into net buyers of Indian stocks for this month in the cash segment. The bears are currently on the back foot, and this market rally may continue unless Trump announces something very nasty, reinforcing the possibility of the strong gains in April. Thank you so much for listening. Have a good trading month ahead.